In today's extremely competitive market, many Americans are concerned about the status of the housing market. Around the same time last year, Google searches for the phrase, "When is the housing market going to crash?" had gone up 2,450%, along with the questions as to why the housing market is hot and why are home prices rising. It turns out people are still concerned as we witness the 2022 housing crisis. This year, the U.S. housing median prices increased at a record high of $413,000 in June until it dropped to $389,000 in August and $384,000 in September, which is up 43% since the COVID-19 pandemic began in March 2020, according to NAR data. This is primarily due to the housing supply dropping at its lowest since the 1970s because of the increasing construction costs and many investors buying newly constructed houses for investment. With the continuously increasing construction prices, builders cannot produce more affordable houses for buyers. This, combined with the 7.32% current average rate for the benchmark 30-year fixed mortgage, makes it harder to buy a home. This sudden increase in interest rate is the steepest pace of policy tightening yet. The drop in sales of new homes indicates that demand for newly constructed homes is decreasing. According to the Mortgage Bankers Association seasonally adjusted index, there has been a decline in housing loan applications towards the end of September 2022, with total mortgage application volume dropping by 14.2% compared with the previous weeks. Recently, a senior economist at Zillow said that less new inventory coming in onto the market tells us homeowners are hesitant to list, and high mortgage rates are likely a major factor. It is safe to say that with the mortgage rates doubling since August 2021, along with the increase in the home prices rising quicker than incomes, it has become tougher and tougher to afford homes. According to the National Association of Realtors, home sales dropped at 19.9% from August 2021 to August 2022. According to ATTOM Data Solutions, 34,500 homes have been filed for foreclosure as of August 2022, with Illinois claiming the highest foreclosure rate at one foreclosure filing for every 1,926 units. The state of Delaware follows closely with one foreclosure filing for every 2,387 homes. Overall, high construction costs, longer delivery times, and the general unpredictability of the construction supply chain have had major impacts on the price of new homes. However, Anna Fiaschioni, a realtor in the Chicago suburbs, said that one of the biggest drivers of prices is inventory. She added, if there aren't nearly enough homes for every buyer who wants one, like over the past few years, the housing market looks a bit like the Hunger Games. According to a Realtor.com report, the housing inventory was up by 26.6% compared to August of last year. However, this isn't because there has been an influx of new house listings. In fact, the new listings have dropped by 13.4% compared to a year ago during the same month. The increase in the housing inventory is due to the fact that less houses are being sold, making homes linger on the market longer. So, when will the housing market crash? The economists are torn, creating two sides of the same coin. Some analysts and economists are claiming that the housing market is not going to crash at all. Greg McBride, Bankrate's chief financial analyst, says there isn't going to be a crash in the housing market, and plateauing of prices is more likely to happen than a steep fall. Matthew Poynton, senior property economist at Capital Economics, predicts that there's going to be a 5% drop in the housing market by mid-2023 due to the slowdown rather than a crash. Housing economists point to 5 main reasons that the market will not crash anytime soon: low inventory, lack of new construction housing, large amounts of new buyers, strict lending standards, and a drop in foreclosures. With the demand as well as price gains seemingly at cool down, a correction is bound to happen, but economists say that this is going to be a modest one. No one expects a major price drop on the scale of the declines experienced during the Great Recession. One obvious difference between now and then is that homeowners' personal balance sheets are much stronger today than they were 15 years ago. The typical homeowner with a mortgage has stellar credit, a ton of equity, and a fixed mortgage rate well below 5%. But some economists beg to differ, with some saying that the housing activity is crashing. These analysts and economists have been noticing that the Fed is doing something that is causing the weakening of U.S. housing market. But recently, Fed Chair Jerome Powell has made it clear we aren't watching the U.S. housing market to normalize. We're watching it reset through a difficult correction. He also added, for the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level and at a reasonable pace, and that people can afford houses again. We probably in the housing market have to go through a correction to get back to that place. While the current housing correction have jumped up evenly across the country, this is not a one-size-fits-all correction because the reset in home prices may vary depending on the regional housing market. According to Fortune, some regional housing markets are starting to cool down after the pandemic housing boom, while others are moving straight from the pandemic housing boom into the pandemic housing bust. According to Kristen Riffle, a real estate agent in Las Vegas is one of the leading indicators for home price action in the housing market, like we saw back in 2008 and in the recent frenzy. We're absolutely feeling the heat here. The buyer pool has, for the most part, completely dried up. But it's not just bubbly markets like Las Vegas and Boise that are feeling the pain. This housing downturn is picking up steam nationwide. In fact, mortgage purchase applications are down 38% on a year-over-year basis, which is the lowest reading since 2014 and over the past 5 months. And inventory levels have spiked in Austin with 435% spike in inventory and 317% in Phoenix. The Fed's reasoning for slowing the housing market boils down to 2 words: demand destruction. The mortgage rate spike has caused a domino effect in the housing market. With the spike in mortgage rate, sale of both existing and newly constructed home declines, forcing the home builders to cut back, causing layoffs in real estate and construction, weakening the labor market, and thus taming the high inflation. And in some regional markets, such as Seattle and Boise, home price corrections have been implemented, implying the Fed's inflation campaign is going to continue until either inflation abates or the housing market pushes the economy into a recession. Sounds familiar? Let's go back 41 years in the past when the central bank spiked mortgage rates up to 18%, creating a housing downturn so sharp that it drove the entire economy into a recession. Now go back 14 years from now and you have the 2008 subprime mortgage crisis. And now, 2022 is a perfect concoction of both, with housing market deteriorating in the face of historic mortgage rate shock and the housing market once again becoming detached from the underlying economic fundamentals. Heading forward, economists and analysts alike believe the housing market will continue to deteriorate. This year alone, Wells Fargo projections had a negative 10.5% in new home sales, negative 7.4% existing home sales, and negative 7.3% single-family housing starts, and negative 10.1% housing GDP. Wells Fargo also predicts that there will be significant drop in sales in 2023, with another negative 6.5% in new home sales, negative 13.1% existing home sales, and negative 12% single-family home starts, and negative 16% in housing GDP. If Wells Fargo's forecast, which also predicts a 5.5% decline in U.S. home prices in 2023, comes to fruition, it would mean that the housing market downturn reaches a level that historically occurs only during recession. So what do you think? Is the housing market going to crash soon? Let us know what you think in the comments below. If you like this video, don't forget to leave us a like, subscribe for more content, or hit the notification bell so that you can be updated when we upload new videos. Thank you so much.